Hi, everybody. Welcome back to another edition of VCTV. I'm your host, Kyle Ellicott, and we are here today to speak about a very important topic when it comes to the fundraising landscape, and that is SPACs. We've talked about these special purpose vehicles in the past here on VCTV and the amount of companies that have raised from them and what is to come here in 2021 as we're seeing more companies take advantage of what seems to be something new, but has actually been around for many decades previously as well. And so we brought together some great investors who have experience and also knowledge of companies that have gone through this process to share with us their thoughts and insights on what's happening in this industry. But before we get started, a big shout out to you, our audience, for tuning in. If you're liking what you hear, make sure you click subscribe, share the episode, and also check out the archive on LaToken.com to hear from today's speakers and all of the speakers on the VCTV family. And if you'd like to be on a show like today as an investor or as an entrepreneur, reach out to the team and or myself, and we'll find that right spot for you. Speaking of the team, a big thank you to the LaToken team and to Maria for making VCTV possible every single day. With that, I'm your host, Kyle Ellicott. Let's go ahead and jump in and introduce today's guest. Gary Fowler, welcome back to the show. It's a pleasure. A little intro and a little background.
Yeah, thanks, Kyle. It was funny because I just got a note from the mayor of Miami's office as we speak, his chief of staff. It's crazy. Anyhow, my name's Gary Fowler. I'm a serial entrepreneur, an investor. I love AI, quantum, and crypto, among other things. I've done 17 companies. I've had 2 unicorns. I was on the original management team of Click Software, which was sold to Salesforce for $1.35 billion. Also, Eva.ai, which is one of the top 5 AI HR tech companies in the world today. I'm the co-founder of that, applying it to remote workforce management. My partner is David Yang, the billionaire investor and entrepreneur from Russia. Today, I've started over the last 2 years GSD Get Shit Done Venture Studio, premier AI quantum venture studio that helps companies from all over the world curate them. We take operational roles, invest, and we take those companies out through Silicon Valley, using Silicon Valley as a port to the rest of the world. And it's with great pleasure to be here and this amazing platform that connects people together, VCTV, and especially with you, Kyle, and Stephen today. I look forward to it.
Thank you very much, Gary, and we look forward to having you here to share more about this space as well. And Stephen, welcome to the show as well. A little intro, a little background for everybody, please.
Hey, gents, great to talk with you again. And so sorry for the weird angle on my camera. The microphone is broken on my regular machine, so I'm
Even I feel like I'm watching one of those old Greek movies, like Hercules or something. You know what I mean? Oh, it's a Zeus. You know what
I mean? So my background, as you can tell, is that I'm a Greek movie actor. You know, just kidding. I was at Goldman Sachs in both London and New York doing investment banking, M&A. Went over to, it was at Morgan Stanley before that. Went over to a boutique firm that was started by the former head of banking at Citibank, and we did a lot of work in the consolidation space, right? And some of that work effectively involved SPACs as well. I've done a lot of investing. You know, I was an investor in a company called Cvent. I was an early stage investor, went public at a valuation of $1 billion, and then was acquired for $1.7 billion by Vista Equity. So still active as an investor in growth spaces. We spent a lot of time, since leaving investment banking, we've still been pretty active in the SPAC space. So really excited about chatting about this today.
Wonderful, and excited to have again both of you and also be able to chat about this. So Steve, let's kick it off with you today. I mean, tell us a little bit more of what are SPACs, why is this all of a sudden becoming a trend and really a go-to vehicle for entering in the public markets? here in 2020, but also now in 2021. I mean, we also had Coinbase, if you guys didn't catch it, announce a little bit more about their public offering as they're looking to create a valuation, or being given a valuation for the NASDAQ private markets of around $77 billion. So we're excited to see how that goes. But back to the question, in terms of SPACs, why is this all of a sudden something that people are paying attention to more than ever?
So SPACs have been around for a long time, and a SPAC is basically a special purpose acquisition company, right? So back about 20 years ago, people were doing SPACs, but honestly, they had a bit of a bad reputation because they had structural issues. And without getting into sort of a capital markets lesson, one of the big issues was warrants overhang. So they issued, at the time of issuance of the SPAC, there were too many warrants. Won't go down that road. That's a different discussion, right? But essentially, what happens with the SPAC is that a sponsor goes and meets with investors and says, look, I have the gravitas and the relationships and the experience to go buy an amazing company in an industry that I have influence in. I've been a senior leader in the industry, I have recognition, etc. Right? And then an investor say, look, you know what, we trust you, we're just going to give you the money, right? That money then sits in a trust. But the money can't be used. The money can only be used to buy the company after a vote with those shareholders, right? So that's the general idea. And those institutional shareholders are under NDA, by the way. So then the team typically has up to 24 months, 2 years to go find an acquisition target. They find an acquisition target, bring it back. If everyone's happy, then then a merger takes place. That's called a de-SPACing, and that merger hopefully creates creates a sort of a win-win situation, right? So from the point of view of the company, it's a way to go public. It often it often leaves a lot of balance sheet on the cash, so cash on the balance sheet for operating expenses. Sometimes this cash is part of the acquisition currency too. But that's sort of the high level of SPACs. So the reason why they've become a lot more popular is that as the actors are changing, right? So if you think of last year, so last year was the biggest year, I think, all time in the SPAC space.
Yeah.
There were 247 issuances, around a $75 billion raise, which basically is a valuation, which is basically, what am I saying, gross proceeds, which is basically about half of the total IPO market. It's crazy, the core reason is that a lot of the access have changed, right? So you're now finding people that have sort of more established sort of credibility and brand names in the PE world and the VC world participating, right? So you've moved away from basically having some sort of operating guy with a hedge fund, that isn't necessarily as sophisticated in terms of that stage of company. You now have traditional PE funds, so guys like the Gores Group, and VC funds participating as well. And frankly, they're doing quite a few of them are doing a good job cleaning up the traditional SPAC issues. So that's why we're seeing this explosion. And then of course, companies want to go public faster. They're sort of, the traditional IPO process is painful. So people view this, quite frankly, as an alternative to going public, right? So
yeah. Go ahead. Sorry. No, go ahead.
Yeah. From the point of view of again, of the company, it gets cash its balance sheet. It's now it hasn't had to go through the traditional pain of its own listing. There can be phenomenal opportunities, but definitely a very, very, very big buyer beware, acquisition target beware. You've got to be very careful about the structure.
Yeah, and just to add some context to some of the numbers that you put out there in the market. So last year we saw, according to SPAC Insider, 248 SPACs that raised over $83 billion in 2020. And I believe in 2019 we only saw 55 of those as well. And then in 2021, so here we are today, just about halfway through the month of February, we've already seen 145 SPACs that have raised over $44.5 billion. Again, according to SPAC Insider, and the average deal size for those look to be about $307 million as well. So this is definitely something that's here to stay. And it sounds like, based on its current pace, will way outshine last year compared to this year. Gary, thank you, Steve. Gary, any thoughts to add on to why this is such an important or such a trend for companies this year and going forward?
Well, so actually, I don't know what I'm allowed to say and not allowed to say, so I won't say too much of my
So general overview of the market. What do you see? Why is it so important? General overview of the market. A company would look at that.
I mean, I don't know if I've done a NASDAQ IPO, right? And it was a painful process. And I just look at it, just having gone down through it all the way to a successful IPO and then the acquisition by Salesforce. So it is a painful process. It just makes it a lot easier. And then one of the reasons, and Steve hit the point right on the head, it's just a lot better. It's more legitimized now. I mean, whenever we go down through it, whether it's crypto or blockchain, in the beginning, it's kind of like cowboys. And then all of a sudden, everybody starts getting reined in and it starts being legitimized. And then the real money starts flowing into it. And of course, there's buyer beware. But I mean, there's buyer beware in penny stocks and, publicly traded companies too. You never know what unless you understand the market and the teams, you don't really understand what's going to happen with that company. So it's a trend. It's grown like crazy. I have friends that have done some extremely successful SPACs. And, from an AI and quantum side, I love it. I think it takes, from my standpoint, it takes a lot of pain out of the process and gets you out faster. And for well-deserving companies, it's a great thing.
And as Steve mentioned too, there's opportunity for those that are pre-revenue. So it's a good opportunity for those that have a big market, and in the context of an acquisition,
yeah,
blank check vehicles.
It's merger and acquisition, aggregating them together. Agree 100%, because the Germans have a phrase, Gestalt, the sum of the parts equal the whole. So from that standpoint, it makes things faster because you can you take each one of the pieces and create something extraordinary. And so that part of it's really interesting. I like it because it's just a lot faster. And knowing some of the people that are directly involved today, it's just it's become more legitimized than it was before. And I remember having been involved in some of this stuff many years ago. What was it called, Stephen? Reverse IPO, right?
Yeah, exactly. Reverse mergers.
Yeah. So I know guys that, I was involved in one of those companies, and it was a lot different. It wasn't as structured, and it was really loose before, because you'd find a shell company and that kind of thing. So it's much better than it was before. And now legitimate companies are starting to come out of it. And, people don't want to be, it's like crypto, right? You don't want to be left on the outside. It's 50,000 or so for Bitcoin, or near 50,000 today. And so you don't want to be left on the outside because the markets are dynamically changing. You got to move faster. Kyle, it's not like it was 10 years ago, 20 years ago. These markets are changing so quickly. You either do or die. You get your company out, get the pieces put together, and, put your dent in the universe, or you forget about it. You may be left behind from everywhere too, right? As I said, we have Rwandan, we have South African companies today, AI companies, Nigerian companies. We're finding companies all over. Why not create an interesting central point to bring those companies all together? I love.
Which leads me, Steve, back to you. I mean, industry-wise, first off, anything to add, but then industry-wise, where are you seeing really SPACs take hold? In Hong Kong and Southeast Asia, we have the third exchange that was focused around health and bio. that helped a lot of those companies. The reverse merger that you and Gary just both mentioned in Australia was very focused around tech and technology companies that were coming out of material companies. And now here, it seems like we have all different types of companies. But anything to add on to Gary's comment? And then what industries are you seeing really start to take advantage of this already, and maybe more so in 2021?
Yeah. So really, I mean, we've seen all kinds of industries take advantage, right? There are two elements that can really help a SPAC. So one of the challenges that a SPAC has is when you look at its shareholder base, typically has a very limited retail shareholder base, and that's it's not something that's ideal long term. So ideally, you want more diversity in your shareholder base from a retail investor point of view. And, so something that helps that is name recognition. So you look at something like Virgin Galactic. Pretty much everyone knows who Virgin is. At least in Europe. Significantly here, and a lot of people know who Virgin Galactic is too. That name recognition helps build the retail component of your investor base. The additional element is growth. Because again, I don't want to get over complex here. Because of the warrant issuance, when the SPAC is being set up, and sometimes as well when the acquisition is being funded, because sometimes even immediately following the acquisition, a funding takes place, like a PIPE, right? A private investment in a public entity. Sometimes there's a warrant issuance, and that issuance could be problematic if you don't have significant growth in the company's revenues and profitability, etc. Right? Just because those things drive value, and those things will bring smart institutions, or if some institutions are barred from participating in PIPEs, through their own charters, right? But smart hedge funds will still come in and participate in those companies when there's a significant undervaluation, right? So the two core elements, and again, there are examples of many that fall outside of this, but in my opinion, I think that name recognition and growth, growth are two things that can really help. Help a SPAC.
Yeah, and what? How does a company? So there's SPACs which are looking as a blank check company to invest or to merge or to acquire, right? As we've said.
Yeah.
But as a company, how do you attract yourself to a SPAC? How do you look at going into those conversations? How does that begin, right? When you go into a public offering, to both of your points, through NASDAQ or through any exchange in the world, there is a very, there is a very straightforward-ish process with a lot of paperwork. When it comes to a SPAC, how do you do that? I mean, we have some very big names, celebrities to athletes to high net worth individuals who are running these. How do I, with Kyle Corp, go to one of these SPACs and approach them to either raise money or be acquired?
So that part of the process has a lot of similarity with both M&A and and a public fundraising, right? Just from the point of view that there are regulatory issues that you might not necessarily have a traditional M&A. But basically, it's as simple as it's either relationships driven, or it's asset driven, right? So what does that mean? If I'm the sponsor of a SPAC, I have a general idea for companies that I think I'd like to acquire, and I have a general idea for valuation and what it'll take to get a deal done, right? So I, as the SPAC sponsor, my credibility is on the line. All I've got to do is get one measly transaction done in 2 years. That's it. The one acquisition. I might do more, but my obligation is to get one done in 2 years, right? So I have relationships that I can go talk to. I'm offering them stock, cash. What's not to like, right? So now from the point of view of the company, if I were a company and I wanted to kind of go public or be acquired. There are quite a few blank check companies out there. I could start off talking to the blank check companies. You can also, I'm not very sure of the regulatory issues surrounding what I'm about to say, so I'm just gonna, so I want to be careful. But you could talk to potential sponsors about prior to going. Oh shit.
It's okay. We can still hear you. We can still hear you. You're fine. It's all right. So, Stephen, I'm going to put you as you're fixing. There you go. So, as you were saying, you could potentially, yeah, and I'll say it for you since I'll just kind of dance around it. So, there is the opportunity to potentially get sponsors that can help connect the dots, and we'll just leave it at that. So, switching gears now, and thank you, Stephen and Gary, for sharing your thoughts on that. I mean, we're looking at this market. We got 145 companies, almost $45 billion that's been invested. This is not slowing down, which means and shows that companies are growing faster. There's more technology that has advanced over the last few years, and even more so this year. So where do we go from here in terms of technology and innovation? What is getting really its time here in 2020? And Gary, you've talked a lot about artificial intelligence. We know quantum is very far off. What else do you see in 2020 that are technology trends that people need to be paying attention to, either as investors or that they should start building in here this year?
Yeah, so I just want to go through one point, Kyle, we just talked about. You said about how do those companies get attention? Well, it's back, if you look at doing an acquisition, some of the same rules apply, especially today. You need a lot of visibility. Right. So you need to write, you need to be looked at as industry experts. Obviously, if you've got a company that's in growth mode and you got a lot of press, you got to advertise. If you got a Ferrari in your garage and nobody sees it and you never take it out to the track, it's your Ferrari, right? You got to take it out. And a lot of times what happens with these founders, and we look for companies that have revenue, right, in terms of GSD. Because if they're revenue producing, I know they have product market fit. I know they've had some order success. And I know we're not going to be looked at as foolish if they've got a good team. The other thing is who's involved with the company, what kind of board of advisors they have. Do they have name brand recognition? Do the entrepreneurs, are they serial entrepreneurs? Have they done it a few times? So if you look at their track record, it's right. I mean, these are the kind of simple gauges that we look at, and that, if I was a company out there, I would be doing the same kind of things. You need to stand out from the crowd one way or another. But then the other thing Steve said, it's really important, is the relationships. And you develop those relationships just like we do here on VCTV. You've got to develop those contacts and nurture those relationships, because the exact people that are on these shows all over in different networks and are the kind of people that want to be involved and want to be on the leading edge, because quite frankly, we won't want to be left out of a deal,
right,
wherever it is. So in terms of where it is, AI is extremely hot right now. And when I'm saying it, I hate to use the term AI because it's misused, but machine learning, deep learning, semi-supervised, unsupervised, across multiple vertical markets, whether it's med tech or supply chain or robotics, literally across all vertical markets. But again, I would use the same litmus test. Who are those people in those companies? What are they doing? What have they done? Do they have revenue? Because the thing is, I don't want to invest in a pipe dream where somebody tells me, hey, listen, I can do it. I want to see that you've done your customer development and discovery, and you have customers that are renowned, that are buying your product or service, because that makes us feel confident. And so in terms of the quantum side, quantum is in its infancy. We're looking at the quantum networks. We're looking at all kinds of technology like quantum tunneling that can be used to make communications much faster. So these are we're kind of like where Bitcoin was 10 years ago. We're at the exploratory stage of what's the right thing to invest in. And you got to, whenever you do that early in a market, you're putting your bet on something. If we invested in Bitcoin in 2013 or 2014, we'd be at a different stage today. So we need to look at it. And at the same time, we have to understand it, because of this digital transformation, things are changing. What do we say that, intellectual capacity is evenly distributed around the world, but opportunities aren't, but they are now. right? So with these platforms that are out there where you can find these companies that have incredible technology, part of what they have is they don't have the relationships to get to the market. They don't have the relationships to get out there and get that visibility, because many times they're technical founders, right? They got great stuff, but they don't know how to get it out. The key is finding where those pieces can be applied. Just like Steve said, as I said, Gestalt, the sum of the parts. So here's a company that's doing unsupervised AI. Here's a company that's doing search. Here's another company that has expertise in robotics. What kind of company can we make out of it? And how can we dominate a space?
Right. No, it's all very, very good points. Thank you, Gary. Steve, to you, same question. Looking forward to the rest of the year, what technologies and innovations do you see reigning in the year?
So, so technologies as far as SPACs go. So I'd say a few things. So one, well, let me first start off kind of talking about some of the players, because they, this will kind of connect the dots. Sure. So people like Cantor Fitzgerald, Cowen, what I would call sort of upper mid-tier investment banks are playing pretty significant roles in growing the market, right? I think Cantor and Cowen are sort of number one, number two. If I might be wrong, if I am wrong, it is what it is, right? But so the technology that impacts what they do, isn't, I don't know that I think of the operational technology as being that. I don't see anything life-changing happening this year, right? In terms of potential acquisition targets, like Gary suggested, I think that you'll see, a much wider group of potential targets. And as Gary correctly pointed out, AI is primed, for growth, right? Obviously, we saw Snowflake had the largest U.S. software IPO of all time in September. We're seeing what's happening with Palantir. And the other AI companies, machine learning companies, data science companies in that space that are primed for growth. Primed to go public, right? So we'll see more. We'll see a lot. We'll see companies that are in what might have been perceived 2 years ago to be sort of nascent. We'll see companies in those industries take advantage of SPACs as well. But frankly, we'll see companies in many industries because again, it's just their perception is that this is just another way to go public, right? So if you look, what makes up the S&P 500, right? If you're private and you don't want the headache of a crazy road show and all that kind of thing, someone comes to you with a big enough check and says, look, here's all the stock that you'll own, here's all the cash that'll be on your balance sheet. You might say, wow, this makes my life easy. I have Insta stock, Insta cash, Insta team, etc. And go down that road. Now, one thing that I'm putting out a paper on this when it comes to SPACs is there's certain telltale signs that a SPAC is bad. There's certain telltale signs. So I'm putting out a paper. I'm publishing a paper that goes into the things that you should really pay attention to, because you can almost formulaically take long positions in good SPACs and short positions in SPACs that are structurally bad. Because no matter how good the underlying operating company is, because the SPAC is structured so poorly, it'll almost never do well. At least in the financial markets, right? So I'm putting out a paper that will go into the detail of all that. That's a long discussion, unto itself. So I won't weigh us down with that discussion.
No, it's okay. When is the paper due out for those that are listening that may want to read that?
It'll be out within the next 2 weeks.
Okay.
Yeah, it's written. We're having kind of people do, put in the finishing touches and the review and all that kind of thing. But it's pretty much done. But there's a lot that's everyone's talking about the SPAC space, right? It's hot, it's exciting. Skadden Arps, one of the most important transactional law firms of our time, has put out a range of papers and publications around SPACs, right? People have to be careful. People have to be really careful. So.
Wonderful. Thank you very much. And Gary, I want to come to you. Thank you, Steve. I'm excited to read that paper too. So as soon as it's ready, send it to myself so we can read it, and then we'll share it with the audience. And Gary, I want to come to you for closing thoughts as to what's to come around the markets here in terms of 2021. What innovations, again, do you see? Anything you can leave the audience with? And then where can they find you to continue the conversation, whether about today's topic, AI or quantum or the others?
Yeah, so I mean, we could do a whole show on what's going to happen, but in a nutshell, if we look at unsupervised AI, I mean, we're massively hit by data all the time. So tools that are out there to help us understand that data better, but more importantly, to help us make the right kind of decisions. And I'm looking at so cybersecurity. Obviously, we've got the rise of quantum computers and being able to use these decentralized systems that are able to thwart quantum attacks. So that's coming in, of course, quantum computing in all kinds of ways. So I can see right now, the foundations, whether it's photons and memory, whether it's tunneling, et cetera, the quantum internet. There's just a lot of stuff out there, and I'm starting to see it become real now and investable. So that's really exciting to me. In fact, just for the audience viewers, I have one of the top quantum physicists in the world from Harvard, who's a PhD from MIT, 30 under 30, joining me in a couple of weeks. And we're going to be talking about the cutting edge advances in quantum computing. So just FYI, if people are interested, you can check out GSD and look at our schedule. But we love this stuff. And, our lives are changing. We're starting, if we look from space tech and explore the universe to down home, trying to have insight into our supply chain so we don't miss toilet paper again. It's like the simple things, it's funny. We talk about quantum, we've said, but the simple things we haven't really addressed. So why didn't we have it? Why is just-in-time inventory not working? And why didn't you use artificial intelligence to understand that these kind of pandemics would actually, in advance, we should have had our merchandise planning system supply the warehouses. So it was done in advance rather than the backside of it, not to be punny.
Right.
Sorry, I had to do it. You know what I mean? It's that time.
Okay. It's all good. All good. Awesome. Thank you, Gary. Thank you.
Yeah, Gary Fowler on LinkedIn. You can reach me, GSD, reach me on Twitter. I have a show today. I'm going to highlight top startups. Gary's Picks, sponsored by the top VCs in Silicon Valley. I run it every 2 weeks. Today we'll be talking. We have an interesting startup that'll be showcased today. So tune in.
Wonderful. Thank you much, Gary. Steve, to you, closing thoughts, and where can everyone find you as well online to continue the conversation?
Sure. So the best way to find me is unfortunately still old school email. So it's stevo@crosswork.us. So crosswork.us, Stevo.
I love that. Steve-O. He's one of my favorite characters too. I'm sorry, I just love that guy.
It's all right. Gary's sharing the laughs today. This is great.
Yeah, I think final thought is that it's an amazing space. It'll help a lot of companies. Unfortunately, it will not help quite a lot of companies too. And then also, and I'd love to be on an AI panel when Gary's on the next AI panel. I'd love to be on that.
Yeah. Well, we'll have to get you.
Gary, so I joined. I think it's called GPT-3. So it's the AI Foundation. It was started by Elon Musk. and Sam Altman. I think Elon Musk left, but they have the largest data depository of machine learning data in the world. And there are amazing. The world in the next year or 2 years, even at the consumer household level, the world. The world will be a very different place because of AI, right? So I'd love to, if you guys do a panel on AI, definitely count me in on that as well.
Oh,
Yeah, sure.
we definitely will, Steve. We do them all the time, so we'll get you on that as well, and we'll have to get you on Gary's picks as well. Gary's great show. So thank you both very much, and thank you to your audience for tuning in. If you like what you heard today, make sure you click subscribe, share, and also check out the archive on LaToken.com to hear from both Steve and Gary, along with all speakers of the VCTV family. And if you'd like to be on a show like today as either an investor to share your thoughts and insights, or as an entrepreneur, do reach out to the team and or myself. We'll find that right spot for you. Speaking of the team, a big thank you to the LaToken team and Maria for making VCTV possible every single day. With that, I'm your host, Kyle Ellicott, and we'll be back here in just a short little break with more VCTV. Talk soon, everybody.
Bye-bye.
Bye-bye.